Guys, Microsoft, Google, Meta, all just reported. It's actually pretty interesting. All three beat earnings, beat on revenue. Two of them are down big right now. Those two, Microsoft and Meta, they're actually down a lot. Google's up a ton. We're going to break these down. We're going to look at the earnings. We're going to touch through the earnings releases. We're going to look at them. We're going to value them a little bit. Guys, this is where you come in order to get the recap. It's a big day today. The big day. The Fed just reported they dropped rates a quarter point, expected to drop rates again in December 10th. So guys, let's go check this out. Let's start with Microsoft. I was actually surprised Microsoft was down. They reported revenue of $77.67 billion versus $75.22 billion and $4.13 per share in earnings versus $3.66. They're down 3.6% right now. So Microsoft down 3.5%. Let's go see if they've reported their quarterly result yet. Let's go find it right here. Not the fourth. We want to go 2026. Boom. Q1. That's because remember their quarter ends June 30th. So this is the first quarter of 2026. Their annual report is June 30th, 2025. So the first quarter ending September 30th is their first quarter of 2026. Here it is. Revenue up 18%. Guys, this is a multi-trillion-dollar business, and their revenue is up 18%. That is absurd. Operating income up 24%. Their net income on GAAP basis was up 12%. EPS up 13%. Jesus Christ, guys. How does a company like this who crushes it, and they're still down 3.5%? Unbelievable. Absolutely unbelievable. Let's go look at some breakdowns here. Cloud revenue, that's the big thing everybody's talking about. It's all about the cloud. It's all about AI. $49.1 billion, a 26% increase, and commercial remaining performance obligation increased 51% to $392 billion. That's incredible. This means that they have $392 billion left that they have to go out there and perform on. That is absolutely incredible. Revenue in intelligent cloud up 28%. Now, guys, Microsoft will provide forward-looking guidance in connection with quarterly earnings announcement on its earnings conference call. So if you're interested and you listen to the conference call, you can always listen to it. They'll provide guidance. I'm absolutely amazed as to, because usually when they guide poorly, that's when you see a decline. What this is telling me is people have enough Microsoft. Okay, let's take some money off the table. I don't know what this means, though. I mean, if you told me ahead of time that Microsoft would beat revenue by 3.5% and beat earnings per share estimates by 12.8%, I'd have been like, yeah, they're going to be up 1 billion % after hours. Let's go check out Meta. Meta's down even more. Meta's down 6.5%. Here's what they reported. Revenue of $51.24 billion, beating $49.4 billion, beat by almost 4%. Earnings per share of $7.25 versus $6.66, beating by 8.9%, and they're down 6% after hours. I wonder why that is. Let's go see if we can find the Meta earnings release, because it's important to see what their investor relations earnings call. We don't want the call. We want, here we go, October 29th. So it's a little bit hard to see. Nick, are you getting this properly? Can you see this on the screen? Okay, revenue up 26%. Cost and expenses, though, up 32%. So right here, the cost and expenses were up more than revenue. Income from operations up 18%. Income taxes up a ton. EPS actually down 80. Wow. Oh, because of probably some charges. That's why. One-time non-cash charge impact. That's why. Okay. Net income. 2 points. Okay, down 83%. That's because of, okay, that's pretty interesting. Let's see here. So that's probably why they're down so much. Guys, family daily active people up 8% year over year. That means on average, 3.5 billion people are active on WhatsApp, Instagram, Oculus, Facebook, which is up 8% year over year. Almost half the earth is on them and is still growing 8%. Increased their ads by 14%. The displaying of their ads. That's how they make their money. Average price per ad increased 10%. So not only are their number of ads up 14%, the price is up 10%. Revenue, an increase of 26% year over year. Cost of expenses we talked about. Capital expenditures were $19.4 billion. That's going to be a big thing for them. They're going to spend a lot on capital expenditures. Zuckerberg was very famous for saying that he's going to spend about $600 billion in the next 4 or 5 years on capital expenditures. In fact, there's a great internet thing going around where Trump asked Zuckerberg this question. He says, how much do you expect to spend the next 5 years? He says, I don't know, $600 billion. It's now, I saw it, I sent it to my wife because it said it's a husband asking the wife, how much do you expect to spend in the next 5 years? And it's like, I don't know, something like $600 billion. And my wife got a good laugh out of that one. Cash and cash equivalents and marketable securities were 44.45 billion. Increase of headcount of 8%. Guys, this is an incredible business. If you remember when this company was at $88 a share a mere 3 years ago because everybody thought the company was dead, the company was not dead. The company's now up almost 8x since then. That's incredible. I bought it on the lowest day possible. Not my only buy. I was buying all the way down, and I sold around $200 a share because I thought it went up too fast. Big mistake I made. Meta is a company I wish I want to own for a very, very long time. It's a great business. Their products are great. WhatsApp is awesome, and they've barely monetized WhatsApp. It's an incredible, incredible business. All right, let's go check out Google. Google, revenue of $102.35 billion, beating 94.07. That's beating by 8.8%. Earnings per share of $2.87 versus $2.27 estimate, 26.4%. Now, after I'm done looking at the Google quarterly results, I'm going to go through my stock analyzer tool to show what I think these companies are each worth. So wait for that one here. But let's see how Google's doing after hours. The googly moogly. Google is up 5%, up $14 per share. Another company that in 2022 was down like 80 some dollars a share. Everybody's calling for the CEO's head. And that'll happen again at some point when people stop getting so excited about tech. But it's an incredible business. Our community rating is a buy with an average intrinsic value of 263. Now, obviously, this is based on last 6 months. And in the last 6 months, this company is up 70%. So obviously things change as pricing changes. People haven't changed their votes yet. But this is an important thing to understand in our software. So let's go see what Google's quarterly result, anything Google quarterly earnings. This is all I do, guys. The same thing you're going to do. Investor relations, Q3 earnings release, October 29th. Let's pull this bad boy up. Revenues up 16%. That's incredible. Year over year. Google search, blah, blah, blah. Google service revenue is up 14%. Google cloud revenue up 34%. Better than Microsoft's growth. That's pretty impressive. I want to see where YouTube is here. Their actual YouTube revenue. There's the two top search engines in the world are Google.com and YouTube. They own both of them. YouTube ads. $8.9 billion last year, $10.26 billion this year. That's an increase of around 13 or more than that, 15%. That's pretty incredible, guys. Another incredible business here in Google. Absolutely incredible. Other bets. Ooh, revenue from other bets is actually down. Other bets is there small little things they do to try things out to see if they can grow into something big. Revenue's down big time there. So anyways, let's keep going here. Operating income. So look at this. They lost. So the revenue's down. They lost more money on their other bets, $1.4 billion versus last year. But operating income, Google services, look at this. Google Cloud, look at this growth. Big time growth. Big time growth. Total income from operations, though, only up about 10%. Not bad. Not great. Because they have these big losses here that really ate up a few bucks here. That's okay. Guys, like I always say about quarterly results, they're great, they're fun to look at, but they're nothing to make a decision based on. You sit there and go, all right, don't get caught up in it. Use the results to your advantage if people overreact and the price is good. We're always want to buy price versus value. So let's go look at what these things are worth. Let's start with Google. Stock analyzer tool. I'm going to pull up the last time I did these companies. Now, guys, I did a 10-year analysis, and this is why the stock analyzer tool is so important. And I really encourage you, after you've watched us do the stock analyzer tool, this is our most popular tool in our entire portfolio. And I use these things every single day. After I'm done looking at this, if you've been part of our channel for a while and you think you're ready to take the next step to level up your investing game, check these out. Go out there, check out the community. We have a 7-day trial. We have a community. We have tons of software here. We have all the data, everything to help make you a better investor. The more important thing is surrounding yourself by like-minded people. People who get excited when price is below value, not the other way around. We don't chase hype in this community. We all evaluate things and realize when you buy a stock, you're buying a piece of a business. If you're interested in having less fear in the markets and understanding more and being a good learner, check out the community. Check out the trial at the link below. 10-year analysis. I did 5, 8.5, and 12% revenue growth. I had a profit margin of 23, 27, and 31. Same with free cash flow, which is a big jump, but I think the free cash flow will catch up, but they're going to invest a lot of money going forward. PE of 18, 20, and 22, and a 9% desired return. I hit the analyze button. The stock's currently at 290. Seems a little rich based on my assumptions, and I think I had aggressive assumptions up here. Low price of 140, high price of 370, middle price of 230. I have in my watch list at $200. Okay, let's go check out Meta. And the last time I put Meta in my stock analyzer tool. Oh, wow, I'm actually surprised by this. I did 8, 12, and 16% revenue growth. That seems high. I'm surprised I did 12% for the middle. I had a profit margin and free cash flow of 32, 36, and 40. I did PEs of 20, 23, and 26. I did a 9% return. Seems a little rich here, but maybe I was trying to prove a point about something. I hit the analyze button. The stock's currently at 670. Wow. I have a low price of 600, a high price of 1700, a middle price of 1000. Okay, let's go change one thing up here. Let's do my revenue growth of 6, 9, and 12%. How does it change things? Still looks pretty interesting. A low price of 500, high price of 1250, a middle price of 800. These are the things to remember and understand, guys. And I have it on my watch list at $400 per share. That seems a little low. No, I'm comfortable with $400 a share. I'm actually comfortable with that. That would give me ample margin of safety. Maybe I'll go to 500 a share just to be ready to look at it when it comes, but I'm not going to pull the trigger on it. I want to make sure I understand my assumptions there. Now, the last one, good old Microsoft. Microsoft is a gift that keeps on giving. Microsoft. I did 6, 9, and 12% revenue growth. I did profit margin of 32, 34, and 36, and free cash flow of 28, 31, and 34. They're always above on the profit margin versus free cash flow, but I don't think there's any fraud going on at Microsoft, and I think things will even out eventually. PE of 20, 23, and 26, and 9% return. Hit the analyze button. Boom. I've got a low price of 240 to 280, high price of 570 to 600, middle price of 375 to 410. So I got to wait a little bit for this one. That's okay. I'm good with that. I will gladly wait for the right time to buy. I want you to be the same way. So guys, if you enjoyed this video, subscribe to the channel if you're new. If you've been here for a while or you belong to our main channel, check out our community and our software in the link below. And if you're ready to up your game, check it out. Thank you for your time.